and welcome to the flagship podcast where we bring you conversations with some of the most influential figures shaping the worlds of finance, economics, startups, and much more. Today we have with us Mr. Dhruv Goyal, co-founder and CEO of FourLion Capital, an India-focused investment firm. Dhruv graduated with honors in economics from Harvard College and later earned his MBA with distinction from Harvard Business School. Prior to founding FourLion Capital, he worked in investing and advisory roles at BlackRock and Evercore, gaining experiences across corporate strategy, M&A, capital markets, and restructuring. In this conversation, we'll discuss his journey from Harvard to Wall Street, his views on investing in India, and the opportunities he sees for the next generations of founders and investors. So, thank you for joining us today. It's great to have you on Vantage. On behalf of the entire team at D Street SRCC, we extend our warm regards and truly appreciate you taking the time to be with us today. I am Priyanshi Khetan, and I will be co hosting today's podcast alongside Rachit Joshi.
Lovely to meet you both, and my sincere gratitude that you've given me this platform, and excited to have this conversation.
Thank you. So, starting with the first question. With the Evercore and BlackRock pedigree, the Harvard brand, and now the founder identity, which one do you most naturally lead with?
Which what? Sorry.
Which one do you most naturally lead with?
Oh, in terms of defining my identity,
Yes, sir.
that's a very interesting and unique question. I would actually say none of the above. What I have learned in my short journey thus far, I'm still way too young to be giving real life advice, is all of these are essentially logos on a page that give you credibility to walk into the room. But once you're inside the room, what you say is what matters, right? And the stories that you tell are is what matters, right? And so these kinds of organizations are designed to create a platform for you to learn, right? Whether it's in an academic or a professional capacity. But at the end of the day, what you pick up from these, reputable organizations, what you learn from your colleagues, if it's a work environment, or your peers, if it's a college environment or a business school environment, uh, that's what you eventually take, and that's what really defines you and your identity. So whether it was a fancy school or a less fancy school, whether it was, a prestigious school like SRCC or not, I would say the end of the day, what matters is what you know and what you've learned, right? And you can be an excellent student absorbing a lot of information at a less fancy school, and a not so great student uh, that does not take advantage of all the resources in a fancy organization. And I can bet you that 99 times out of 100, the individual that put in the effort, irrespective of the organization that they're in, and really pursued excellence in whatever they were doing, odds are that they'll win at the end of the day. So coming back to your question, I would say, it really is a function of what you know, the stories you tell, the picture that you paint, and really all of these organizations uh, just tend to give you a foot in the door. So they do have an important role to serve, and I'm not belittling their role in my career or in my lifetime, but are they the things that I lead with? I would say not necessarily.
So that's totally an interesting way to look at it, and I can see how those experiences has actually like shaped your perspective. So
Yeah,
Four Lines
absolutely.
name. Yes, moving ahead. Four Lines names itself carries meaning. For a fund whose identity is deeply tied to India, how intentional was the branding exercise in communicating your investment philosophy to a global audience? So,
Yeah, I mean, this one, writes itself, which is we are a firm that is 100% dedicated to investing in India, whether it's on the public or the private side. We obviously started on the public side and have gravitated to doing more work on the private side as well. But at the core ethos of the firm, India is kind of central to that, and that is where we spend all of our time looking for interesting investable opportunities. So when my business partner Pravesh and I were thinking of the right name, we wanted a name that foreign investors would feel comfortable pronouncing, but at the same time would have deep meaning back home in India. And that was really the genesis of that, which is, everyone understands and appreciates the four lions on the Shoka's thumb. And so that obviously has real deep cultural meaning in India, but at the same time is easy for a foreigner to invest. So we exclusively raise and deploy dollar capital, so capital that is coming from investors outside of India into Indian opportunities, right? And so we felt having that balance of a English sounding name, but one with deep Indian cultural ties would work really well. And that's how this name came about.
Okay. That's a great way to
Powerful
resemble.
idea.
That's a great way to resemble India's in your capital, in your firm. I would like to ask you this question: that your story, your whole story, how finance happened to you? Was it like a short thing before even graduating from Harvard? So, or it developed during the.
As I think back to my journey so far, uh, every time I have tried to think about or put together 5 or 10 year plans, the world has had a very funny way to kill all of them, right? And so, one of the big life lessons that I've learned over the last, I would say 15 odd years since I became an adult is really not trying to connect the dots forward, but rather focus on doing the right things at the right times and being opportune when uh, things come your way, as opposed and then trying to connect the dots backwards as opposed to the other way around, right? So one way that a lot of people tend to design their careers, which is not a wrong way whatsoever, is they'll say, I'm going to go to SRCC, then I'll go and get that 2 year job at McKinsey or Bain, and from there I'll go and work in private equity and, take things from there. Uh, I've always found that, life has funny ways of pushing you off of a career path that you've devised in your head for the last how many odd years, right? um, Whether it's the need to move to a different city for a significant other, or a bereavement in the family, or life throws up a variety of different reasons why these career paths have to deviate, right? And the only little advice that I would give that I've myself tried to practice is just kind of keeping your eyes open so that when life throws interesting opportunities your way, you're ready to grab them, right? Um, I would say folks like yourselves as well, working, studying at such a prestigious school, there are going to be people that over the course of your careers, give you really interesting opportunities. The folks that tend to be very successful over time are the ones that grab those opportunities with both hands, right? And trying to overplan or really over predict what your career will look like typically doesn't end well because it just becomes a source of great dissatisfaction and unhappiness, right? And life is about taking those winding roads and not necessarily just and being comfortable with uncertainty, right? Uh, if you're just going to stick to that linear path, then is that really a life well lived? Right? When I think about who are the two people in my life that I'm really trying to make happy, right? It's my 18-year-old self who had a lot of dreams and ambitions, like the two of you and several others listening to this podcast, and my 80-year-old self who is going to look back and say, did I do the things that I should have done when I was at this age and at this point in my career, where I'm really trying to minimize regrets, right? And so the 18-year-old you has a lot of dreams, and the 80-year-old you has a lot of regrets, right? You want to maximize your dreams and minimize your regrets. So yeah, I just think that going with the flow, being in the present, those are strategies that have worked very well for me, which is not to necessarily say that that's how, everyone should lead their or design their careers, but over planning is also one thing that I would kind of caution against. Because you don't know how the world is changing, right? I mean, you just look at kind of what's happened over the last few weeks and months with AI. It's truly revolutionizing everything that we do in our lives, right? And so, you might have said at the start of SRCC, I want to be a McKinsey consultant, and then towards the end of it, you want to say, oh, I actually really want to go and work at a AI startup. So having and reserving that flexibility, I think will hold you in good stead.
That's a great philosophical viewpoint to look at our career, for sure. And it gave us a true perspective about it. And since you talked about AI, I wanted to understand one thing from you. Since you have been primarily deploying capital in India, where do you think India is lacking behind when it comes to deep tech and AI? And what structural changes would be required to compete with US or China in following years?
See, the big challenge is that this technology in particular tends to be very capital intensive. So whether it's training frontier models or the infrastructure required for that, or building out kind of chips and memory and all of the things that go into doing that work, all of this requires a lot of capital. We're talking not just hundreds of millions, but in some cases tens of billions of dollars. Structurally, at a 4 trillion or $4,000 billion economy, we just will never be able to compete with the 25, $30 trillion kind of economies of the world, particularly the United States, who can really invest in these technologies in a meaningful fashion, right? With real capital, real dollars behind it. So I think that is, just the way the cards have been dealt, and puts us in a little bit of a difficult position when it comes to really building or being at the forefront of this AI trade at this stage. However, I'm a big believer that we don't necessarily have to be the ones building the models at the very start. I mean, you do see some fantastic companies like Sarvam, which recently became a unicorn, doing that, right? And all power to them. And I truly, genuinely hope that they're very successful. But I'm a big believer where India is going to win is on the application layers, right? It's on the stuff we'll build on top of the models, right? And we see that already with companies like Perplexity, which was made by an Indian IIT alum in Arvind Srinivasan, right? And I'm very confident that the wrappers or the AI applications we build on top of the models, many of the best ones will come from India. So I think that part I'm relatively optimistic about. If I think about where else we'll play in the AI supply chain, I think nothing stops us from really participating in the data center trends in a meaningful way. India has one pretty structural advantage, which is we can generate a lot of cheap power relative to other countries in the world, and power is a very, very big input into data centers and kind of powering data centers. And so to that end, we kind of have a right to win in the kind of data center world. And we're starting to see a lot of Indian real estate businesses uh, uh, meaningfully invest in that trend. And then finally, our IT services businesses have, over the last 20, 25 years, become really, really good at the implementation game. So what I mean by that is, big softwares that are developed in the West, whether it's SAPs or Salesforce or ERP systems, your Infosys and Wipros and TCSs of the world became very good at taking those softwares and actually going and implementing them onto the platforms of old school businesses. So think of like an old school business like a GE or a Rolls-Royce or a Coca-Cola. These IT majors became very good at the implementation game, right? Which is relatively labor heavy, requires you to go in, install systems and make sure it's debugged and all of that, right? Who's to say that they can't use that muscle to implement AI applications as well in the enterprise, for the enterprise, right? For old school businesses. And that, I think, can be a very, very profitable trade for these IT majors as well. And then finally, I'll say, look, a lot of these GCCs or global capability centers that have set up large offices in India, they can actually move up the value curve, right? As they offer, uh, their individuals, or as they kind of augment their individuals with like a Claude subscription or an OpenAI subscription. So, the average Indian employee can also do a lot more work now that they have the benefits of these AI platforms to support their work. So I actually see a lot of these GCCs move up the value chain, which is very good for the parent companies, right? Because then they can cull, workers here in the United States or other high cost jurisdictions and move them towards India. I actually think that increasing the productivity and the skill sets of our average Indian employee, helping them move up the value chain, will be a net positive for the country. So there's a lot of positives to look for as well. But expecting us to participate in the kind of AI wars that are going on right now on the model side would just be, silly because of the drain of resources that we just don't have today. So I think it's all the other things that will be playing a more significant role on.
I mean, that's a great way to think about. Like India always had great human capital, but what's stopping us, it's the capital, the physical. Do you think people like you and people who can unlock capital for India by addressing or focusing limited partners from US dollars into America in India, they can fasten up this process eventually? Or
It'll take time, right? At the end of the day, capital is a very, very rational instrument. It goes to the highest return for a certain level of risk, right? It's constantly chasing the highest return for any one unit of risk, right? And today, fortunately or unfortunately, the returns that are being delivered in India for the risk of being of investing in India for a foreign investor, right? The risks include currency risks and corporate governance in their minds and all of that good stuff. Those risks are not being adequately compensated for. And therefore, many of these foreign investors have turned bearish on India. But these things tend to move in waves and cycles, right? So today that might be the case, but things turn also very, very quickly. So if I just give you a quick kind of example of this, we've seen a 10% correction in the Indian currency about four times in the last 20 years: 2022, 2018, 2013, and 2008. Right? And a 10% movement in the currency obviously shows weakness, in the economy, right? And so every time that that's happened, right, for reasons that may not even be in India's control, whether it's an oil price hike or the US Fed raising rates, every time there has been that movement, The subsequent 24, 36 months have been very, very strong from a returns perspective. So actually, the periods of greater uncertainty tend to be the best times to invest in India. As Warren Buffett very famously said, when everyone is fearful, you want to be greedy, and when everyone is greedy, you should be fearful. This is exactly one of those periods, right, where everyone is feeling fearful about investing in India. And that's where folks like myself come into the picture, right? Our job is to tell the India story and convince people to underwrite India, even at times where it might feel very uncertain, right? Because this is the period where you can get assets on the cheap. And if and when the India story comes back in a meaningful way, you then get to see the appreciation and the returns. But yeah, it's always challenging to sell a different geography to folks who are comfortable in a market like the United States. But that's where the skill of a good salesperson comes in, and that's what our jobs are. As folks kind of selling the India story to investors abroad.
That's a very practical way to think about it. So, as someone who bridges the Indian market for global capital, what does the ideal Indian company that deserves global investor attention actually look like to you?
I think at the very baseline, you know, the ideal Indian company that foreigners want to see at the very, very start has to be the highest levels of integrity and corporate governance, right? So if that doesn't exist, nothing else matters. Because the first thing a foreign investor looks for is hygiene, right? And any sort of bad press is just very, very difficult for foreign investors to digest. Which is why if you think about the companies that they own the highest amounts of, they tend to be the four large banks that are non-PSUs, right? So HDFC, ICICI, Kotak, and Axis, right? All four of these banks tend to be the companies with the highest foreign ownership because they've been perceived to be well regulated with strong corporate governance. So I would say the first piece of this puzzle is very, very strong corporate governance. The second piece of the puzzle is certainly around capital allocation, right? So, is the incremental dollar going towards projects that are generating high ROCEs, returns on capital deployed or employed? And so that is the next kind of thing that foreigners and Gora investors, and frankly, any investor in the world should look at, domestic or foreign, right? Which is the company actually redeploying any of the free cash flow that it's generating in the most thoughtful ways, right? And generating a high return on that. Because if not, then conventional corporate finance theory should tell you that you should return that capital to the investors, right? Via dividends or buybacks or whatever. And so the second big thing I would say that they look for is you know good strong capital allocation. And then finally, at the end of the day, you're backing a management team. And again, this might come back to corporate governance, but you're backing a management team and someone who can really execute, right? And there are some fantastic examples of that in our country, who now demonstrated a long track record of execution, right? And excellence in execution. And so it's like picking a ghoda in a race, right? You have to really back a management team that you think will deliver strong results. And so I think these three things are what foreigners look for. But unsurprisingly, this is not too dissimilar from what Indians will also look for, right? Um, this is just the conventional investing vision or wisdom that managers will impart, which is look for businesses that have sustainable moat, longevity of growth, strong corporate governance, quality management teams, and then good capital allocation, high ROCEs, high ROICs. I think these are the kind of four or five table stakes things that all investors look for. Now, that is not something that's unique. That's become commoditized. If you ask Claude, what should I look for as an investor? Claude will tell you these are the five things that I just ratted out right now, right? However, the skill of the manager is actually applying this framework to the various companies that exist in the world. And that's where valuation goes from being a science into an art, right? Because that's when you're really doing work and your numbers will be different from mine and your assumptions will be different from mine. And based off of that, the intrinsic value that you would have for a company will be different from mine, right? And if my intrinsic value is lower than what the business is trading at, then I should be a net buyer. If my intrinsic value is higher than what the business is trading for, and I should be a net seller. It's literally as simple as that. But that skill of determining the intrinsic value and assigning probabilities and assigning weightage to these various factors that I outlined earlier, that is where the skill of a good investor comes in and a good manager comes in.
That's a useful framework for founders and investors alike, so and also it sounds like quality matters more than narrative. So, are there sectors within India's listed universe that you believe the global investment community is still fundamentally mispricing or misunderstanding?
So if you think about where foreigners are largely invested today, I would say they're in the consumer discretionary world. They're in the financials ecosystem, so as I mentioned earlier, and then they're certainly in a lot of healthcare names. Um, and the tech ecosystem in our country is small today. It's growing, particularly in the public markets. It's growing very quickly as all these new IPOs come in. But foreigners are well represented there as well. So I would say they're represented in tech, healthcare, in financials, and then in consumer, where I think that they can spend more time and really appreciate kind of the India's story is in the manufacturing world. So I've been very, very pleasantly surprised accompanying my business partner Pravesh on trips to Indian manufacturing units. And this could be manufacturing anything from cryogenic tanks to aerospace and defense, parts. And I've just been blown away by the quality of manufacturing that you see in India, right? So when there's a will to really put together world-class manufacturing, Indians find a way, right? And one great example of that is JSW Steel, right? Today, the JSW Steel plants that you can go visit are can produce steel at the lowest cost in the entire world, right? And that's something that India should be extremely proud of. That something like that exists in our own country, right? But I don't think foreigners have adequately appreciated the industrial slash manufacturing story, right? And the potential that that has. And you see that reflected in their ownership numbers as well in these businesses. But I think over time that'll grow.
I mean, that's something great to listen about. So I would like to ask you, so as we stepping into the boots of an investor, what actually happens from a moment the stocks comes into your radar and eventually ending up in your portfolio? How the whole story looks like?
Yeah, absolutely. I think um, from the first screens that we would run, looking at names to the actual to that stock actually finding its way into our portfolio is actually a pretty lengthy process, which requires a lot of work and effort doing due diligence on the name, um, because that's essentially what we're being paid for, right? Like the actual clicking of the button is something anybody can do. But what we are really being paid for is picking the right names from a very large universe or a very large basket of public securities that we can choose from, right? So everything from meeting the management team, spending time with them, understanding, their levels of corporate governance, their safeguards, all the kind of systems and checks and processes that they've put together, their standard operating procedures, all of that stuff is kind of table stakes, right? If we see any slippage there, then that will be a natural no on the investing side. So we really care a lot about spending time with the management team. If it's a manufacturing business, which has real kind of factories and plants, going and visiting those and making sure that what is being advertised is actually what is being delivered, right? And when you have businesses that you can go and do that diligence work on, it makes the whole process a lot easier. Because when you're at a plant, you can get a sense of the culture there. You can get a sense of whether everyone's working towards a common mission. You can understand kind of the order book and how quickly it'll convert into revenue over the next few years and all of that. So doing site visits and really understanding the business ground up. And by the way, you can be doing site visits not necessarily only for industrial companies, but even for an NBFC or a bank, right? So, for example, we in the past owned this gold finance company called Manappuram, right, which has plants all over the country, or rather, not plants, outlets all over the country, retail outlets all over the country to cater to the average individual looking to loan off their gold in exchange for cash. So actually going, visiting a few stores and seeing how the entire operation is run. Are they collecting cash? Are they doing anything under the table that you absolutely don't want to invest in? So doing that due diligence is extremely important, right? And another business that we've invested in is this company called Ethos that sells high-end watches, right? So actually visiting the watch stores, speaking to the folks that work there, like that kind of diligence, primary level diligence is in our mind second to none. Really, really important. And then finally, after you've spent time with the management team, gone visited their stores or their factories, then you start doing all of your work on the financial side as well and making sure that the multiple that you're paying for the business is a reasonable one. So this requires a lot of triangulation, taking advantage of all the data points that you have across the financial statements, the earnings reports, the earnings transcripts and then all of your primary work to put it all together to make sense of what the intrinsic value of the business is, right? And once that is determined, and if you believe that the intrinsic value is significantly higher than where the business is trading, and you believe you can earn a decent IRR on that company, then you pull the trigger and you build up your position and size it appropriately, of course, and then hope that your thesis plays out.
Sure, we can fairly say that capital follows trust and confidence first, then comes the financials from your perspective. I would like to know about the SpaceX recently went public with an extraordinary valuation of nearly $1.8 trillion. What's your view on that IPO? And do you believe the valuation is justified given the company long-term potential? Or
I think this company is a N of one company. There's only one company in the world that can really do what this company does, right? And I've had the great fortune of visiting two of their uh, plants, one in Brownsville and then the other one in Austin, Texas. Both are actually in Texas. And I have been completely blown away by what I've seen. Right? The technology is not one or two generations ahead, it's several generations ahead. So what Elon and his team have built is quite extraordinary. So if you just wanted to study and understand the business in isolation, whether it's their launch business, Starlink, or some of the computing businesses, the AI/computing businesses that they're now standing up, it is a truly, truly remarkable company. There's no two ways about that. Now, the valuation story is in my mind always a separate one, right? You can be a great business with a not so great valuation, not so great in terms of being kind of overvalued, or you can be a bad business with a very, very attractive valuation, right? And so it's always important to distinguish between my views on the business versus my views on the valuation. Right now, what these guys have very smartly done is the actual amount of float in the public, or rather the shares that are being traded freely in the public is so small. It's only about $75 billion for a company of the size of 1.7 on trillion, that the number of shares that are exchanging hands is actually very, very small relative to the market capitalization of the business, right? And given the mania and the kind of retail love for Elon Musk, you know for a fact that there'll be a lot of demand to own a piece of SpaceX in people's portfolios. And so then consequently, you're going to have pretty sizable demand with very, very little stock for these people to actually trade. Now, what happens when there's a lot of demand for the stock and the availability of the stock is very, very limited? The price shoots up,
Right.
right? And so that's basically what's happened in this situation as well, right? Should a business be trading at whatever it is, 60, 70, 80 times revenue, that to projected revenue for next year? Probably not. No business should be trading like that. But at the same time, does this business have extraordinary capabilities, and is this in a league of its own? The answer is yes, right? So at the end of the day, multiples are, as I said earlier, a function of storytelling. And so I can tell you a story either way to convince you. Right? I could tell you a story that says, hey, listen, like some of the addressable market numbers and stuff that are in the S1 don't make a lot of sense. And therefore, it's too highly valued, or the float is too little, and therefore the valuation is not real. Or I could tell you a story around how this is truly the single greatest business potentially of our lifetimes, right? And so, does it justify paying those multiples because the business will grow into those multiples? Who knows, right? I mean, Elon recently tweeted that SpaceX should be at $1 trillion of revenue by 2030, and they're at $20 billion today, right? Give or take. So, will it grow 50x in the next 4 years? It's a decision that folks have to make for themselves, right? So again, valuations are always a function of storytelling. I always tend to focus more on the business. Would I be a net buyer at 1.77 trillion at the IPO, now greater than 2 trillion? Maybe not. But is it one of the most extraordinary businesses in the world in a league of its own? Absolutely.
It is true that
So that
Elon is a true seller at the last. And
Friend, all sales is storytelling. If there's one skill set all of you should practice, should get good at, it is telling a great story. There is nothing in your life that will be more helpful to you from a communication standpoint than being able to tell a compelling story. All sales in my mind is storytelling, right? And so, and I believe there is no better storyteller on planet Earth than Elon May Musk.
that's a fair way to fair to frame the debate. And if you could invest in only one trend for the next decade, what would it be? So,
One trend,
yes.
I would invest in live events. Live events could be sports, could be concerts, could be the platforms that help sell tickets, so like a Book My Show in India or a Ticketmaster in the United States. I would invest in anything and everything that has live events. And my thesis on this is extremely simple, which is as AI becomes more and more prevalent and stronger and more capable, the productivity of human beings is going to grow to such an extent that the traditional 50-hour work week or 40-hour work week, I think, will shrink. The number of hours that individuals can devote to leisure, I actually think will grow. In that scenario, where leisure hours are growing, there will be a significant premium in my mind to live events, right? And whether it's sporting events or concerts or any of these kind of live events. And therefore, I think we are only at the basement level of a super super cycle for live events, right? And we're seeing certain hints of that. Like if you look at the IPL valuations, right, that have just gone by for teams like Rajasthan and Bangalore. I mean, these are very, very hefty valuations. I'm not saying they're unjustified. In fact, my firm has actually participated or helped syndicate about $300 million into Royal Challengers Bangalore, along with Mr. Birla. And so we're very, very proud of that transaction, and we think it's a transaction that'll do very, very well, just given the dynamics and the economics of the IPL. Uh, but at the same time, uh, in my mind, it is extremely clear that live events is where it's at. It's the biggest, most important theme in my mind outside of AI.
Totally agree with you. And since that's a very compelling long-term bet as well. So,
Absolutely.
what is one in yes, what is one investing belief you held 5 years ago that that you've significantly changed your mind about? So,
One belief that I had 5 years ago was macro matters, right? And therefore, it is important for investors to be constantly trying to preempt macro and believe that, oh, if this happens in this corner of the world, then this will happen. And if that happens, then this stock will do well. Right? We start to tell stories in our own heads about certain macro events and what they will do for certain securities. I think one of the big lessons we've learned since we started doing our work is that the macro matters, but not as much as the micro, right? And what we mean by that is there really isn't much of a substitute to doing bottoms up work on the companies that you want to invest in. And I described some of that work in prior question for this conversation where you're talking to management teams, going to the plant, doing kind of primary research, spending time with the financial statements and all of that. I think that bottoms up approach to investing over long periods of time will always beat what I call slightly more lazy macro driven investing. Right. So I think the one big lesson in my mind has been focus on picking high quality businesses with sustainable moats, and let the macro do its own thing. Trying to preempt the macro is a very, very, very dangerous game.
Truly agree, sir. I mean, if you pick the right business, they might even survive in the worst environment too. It's about the bottom of picking. I would like, since most of our the audience are young professional and student, might be working at global firm who wants to at the end start something like let's say their own fund. What one advice that you would give to them?
I'd say, um, number one, I encourage everybody to, at some point in their careers, it doesn't necessarily have to be now or in 2 years or in 5 years. It can be in 10 years or 15 years or whenever you feel ready. It's a very personal decision, but I encourage everyone to, at some point in your careers, at least make one or two entrepreneurial attempts. I think there is no greater way of learning than actually being responsible for certain decisions. Right? When you go and work at McKinsey or Blackstone or Goldman Sachs, these are all fantastic companies to get training and learn, right? But you're never truly responsible for the decisions that you make, right? At the end of the day, you are advisors. You're either advising a company at a McKinsey or you're advising clients in a fund, right? Like you're never really going to be responsible for taking certain decisions or business building or any of that. And that, in my mind, is the best way to learn. No MBA will teach you that. Nothing in the world will teach you the resilience you need to start a business of your own. So my only advice to people wanting to start this business is the hardest part is jumping and taking the leap. Everyone gets caught up in the golden handcuffs, right? You will go to these fancy MNCs, they'll keep paying you more and more and more money, and you'll feel like, you're in a great position. But what they're essentially doing is they're buying your dream. They're buying your dream, they're buying your aspirations, they're ensuring that you're not able to dream, right? And that is something that I caution people against and really encourage them at some point in their life to make that entrepreneurial leap, right? And just try and fail. And we as a country now need to start celebrating failure the way this country does here in the United States. You go out, you try, you fail, and you land somewhere better than where you started, right? Because that failure is given a lot of value in this ecosystem here because it shows a willingness to take risk. It shows a willingness to try. It shows a willingness to make an effort, right? Even when I hire myself, like if someone came to me with a resume that says I tried to start a tech startup or whatever kind of startup or restaurant, I don't care what startup they start. But I tried to start something and it didn't work, and I have family obligations or whatever, and therefore I need to go back into the workforce. I will be the first one to hire them, right? Because I know what it takes to quit a well-paying job and take a little bit of a risk, right? And so my only little bit of advice is the hardest part of on being an entrepreneur is deciding to quit your lucrative job. But I promise you, once you quit it and really get into the nuts and bolts of building something, the satisfaction that you get when you get your first client or your first paying customer, there is no job in the world that can give you that satisfaction. And so, you have to take the plunge at some point whenever you feel ready, whenever you feel the time is right. But once you take that plunge, I promise you there's no looking back.
That is true. If you want to understand a business, you'll have to build something first so that you can get an idea about what they're doing. So next, I would like to know that significant portion of a portfolio is dollar-dominated capital invested in Indian companies. How does the long-term depreciation of rupee impact your returns and investment decision? And
Yeah,
how do you
no,
think about managing the currency?
yeah, no, all not significant amount. All of the assets that we hold are dollar-denominated assets into India, right? So the currency depreciation significantly hurts our returns. Uh, but what's interesting with the Indian currency, and I urge your viewers also to take a moment and look at a chart of the Indian currency relative to the US dollar. What you find is the currency actually moves in step functions. So you'll find that the currency is sanguine for many years, -1 to 0% kind of changes. And then suddenly you'll see a 10% drop for whatever reason. We saw it in 2022 when the Fed raised rates, in 2018 when oil prices spiked, 2013 when we were a fragile five economy because of the scams of the prior government. In every situation, if you look at the chart of the currency, you see that drop and then it stabilizes for a few years and then it drops again. The reason I tell you this story is if you did a long term average across all the periods of stability and instability, what you find is that the Indian currency has roughly depreciated between 3.5 to 4%, right? So, what we tell our investors is you are very well, you are well taken care of if you're invested over some reasonable period of time, right? Such that any one year where that potential drop happens, and last year was exactly like that, right? Any one year where that potential drop happens will be compensated by other years where USD INR changes are relatively more sanguine, right? So because it moves in that step function, the relative long-term rate is still only 3.5, 4%. And those are very easy to be absorbed in the models that you put together and potentially the returns that you have in India. But the bigger story really is helping our foreign investors understand and appreciate that if they're invested in India for a reasonable period of time, It's a 3.5% depreciation that they have to worry about, which is not insignificant, but also not crazy.
That is truly insightful perspective, sir, and a wonderful note for us to wrap up on. Would you like to give a ending note to our audience?
Yeah, I mean, I'm sure the audience has a bunch of folks from school and other walks of life. All I will say is, and this is somewhat coming from my favorite movie, Three Idiots, is whatever you're doing, whether it's arts, commerce, science, whichever field you're in, all you can be responsible for and what all you should pursue is excellence, right? Um, if you just focus on chasing excellence, life and your career and everything will show you incredible pathways to success. You pathways that you yourself may not be able to fully understand and appreciate. So whatever it is you're doing, even if you're working for a non-profit or choosing to go work in the government after your SRCC experience, chase excellence. Let the people around you see you as someone that does very thoughtful work and integ and doing and obviously doing so with the highest levels of integrity. If that reputation is built up, then life will find very unique ways to reward you and put you in the right seats to do very, very well. Right. But the only parting advice I'll leave with is chase excellence. You chase excellence, life will sort itself out.
Thank you so much, Dhruv, for joining us today and for sharing your experience, insights, and valuable lessons with our audience. The journey and perspectives you have shared have given our listeners a deeper understanding of the challenges, opportunities, and the growth that come with this field. We really appreciate your time and generosity in sharing your knowledge with us and to all our listeners. Thanks you turning in. We hope you find this conversation inspiring and informative as we did.
No, I
Thank you,
loved
sir.
it. My pleasure. Very, very grateful again that you've invited me to speak here. And SRCC is a school that I've always looked up to and one that I've really admired. And so happy to help and contribute in any way, shape, or form. So happy to continue to help you guys as much as I can.
Thank
Thank
you
you
so
so
much.
much, sir. It was great for having you.
Yeah, my pleasure. Thank you very much. Thank you. Good. All set, Rachit? Thank you.
Yes, sir. Thank you so much for joining. That's
No,
all.
my pleasure. Take care. Bye bye.